The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's check out where the market's at right now. We got the S&P moving on down along with the rest of the indices. Right now, the S&P's down 15 points. We got the Russell down 16. We have the Nasdaq down 52 points, and the Dow is down 125 points on the day right now. The Russell is leading the pack, just barely ahead of the Nasdaq on its decline. Let's check out where the metals are right now. We got copper right now down about 0.12%, barely moving right there. Gold pretty much flat and unchanged on the day. We got silver is currently sitting up just 0.03, so very small movement, and comparative at least to settlement over in the metals. We'll get at our energies. We got natural gas is down 1.3%. Nice big move on natural gas. We got oil down just 0.39 to almost 0.5%. We got corn is currently moving on down over here in the ags. We got corn down 0.68, and we got soybeans down 0.76. Some nice moves. We'll get on over at our FX pairs. Looking at the euro dollar, not a whole lot of movement there, up 9 pips. We got the pound dollar up 2. We got the euro pound up 3. Dollar CAD currently down 6. Dollar freight down 7. Dollar yen is currently moving down right now, down 28 pips. Pound yen beating it out like usual, down 53. Euro yen quite a bit of volatility with 41 pips a move. Aussie yen relatively quiet with only an 8-pip move on the day. All right, let's take a quick look over at the news. And like we do each and every day here on the Diagnostic Trading Hour, one of those missing pieces that most people don't have in their trading plans, making sure that they know exactly how to trade the news, whether to avoid the news, what news to avoid, what to expect, how far to expect it to move, and if you decide to do so, how to trade it. If you want to learn how to trade the news, the best way, and I've tried just about every way under the sun, the best way you can try it out there is on Nadex. Hop on over to TFNN.com, click on the Nadex banner right there on the right side of the page. Once you click on that, you can get going. It's really easy. They got some nice educational videos. They walk you through it. They have 2 kinds of contracts. They have binary options, and they have spreads. My instrument of choice for trading the news is actually the spreads, which are really simple instruments. They're basically like trading a call or a put option. You buy if you think it's going to go up. You sell it, sort of like a put. If you think it's going to go down, sort of like buying a put. And the pricing model is the exact same as a Black-Scholes pricing model, up to the center of the spread. You got a ceiling, and you got a floor. And so you can learn more about that. You can check out their education. Obviously, you can hop on over to Diagnostic Trading section there on TFNN. And you can even hop on the Nadex YouTube channel, where they have a whole application and strategy section as well. But to get you going, what you're going to want is you're going to want a demo trading account. So hop on over to Trading, click on Demo Trading Account, fill in a username that you want. Keep it short, especially if you have an Android phone, so you can log in there. They're limited in characters, so keep it as short as you can. Put in your first name, last name, phone number, and email address, then log on in. As soon as you get your email, which takes about 5 seconds, they'll give you a password. You can change that password to one that you'll remember, a secure password that you'll remember. And then to get going on a live account, it's pretty simple. Just click on Open an Account, and then click on Open Trading Account. It's only $100 to fund an account. That's a deposit. It's not a fee. Now, you could, of course, deposit a lot more, but the nice thing is you don't have those day trading restrictions like you have on stocks, and you get the massive margin, especially on those spreads, like you do on futures, but you get better leverage because it only cuts one way, not both ways on you, because your risk is capped and you don't have to get stopped out, all depending upon which one you decide to use. And like I said, it takes about 5 minutes to get going and funded, and obviously you want to set the demo up as well. But when you're ready, or if you want to get that demo extended, get that Nadex account funded, place at least one live trade, and then you can get that going for you. All right, so that brings us on back over to the news and looking at where we're at for the day. We've had some decent little news announcements. Today being July 8th. Pretty quiet day. We got a lot coming up, though, on the day here. We had a manufacturing production and a couple other reports there that you could look at. That one, that was a pretty hit-and-miss report. The main reports we're looking at are actually for tomorrow. Tonight, something I would add to your list that we didn't cover yesterday is add on there that China has their CPI and PPI coming on out. The reason that you want to add that on there is that can definitely affect the Aussie and the yen. They're at 9:30. So put a be aware event right there for 9:30. China CPI and PPI coming out, because that can impact the markets a little bit. There's a couple other reports. They're pretty minor. We don't expect any kind of major impact on them. But just in case, it's good to be aware of the news. M2 money stocks coming out on the yen at 750. That could have a little impact on your yen pairs. Westpac consumer sentiment, very minor impact report. That one's also coming out. You can put that on a be aware on your calendar as well if you're a nighttime trader for 8:30 tonight. We got a Fed FOMC member speaking here in about 30 minutes. And I don't even know how to pronounce that one, but Kosher Lakota. Hopefully I got that right. Speaking about monetary policy and the economy at the Minnesota Business Partnership of Minneapolis. There'll be questions, and, of course, if any big comments come out, that can have a little bit of an impact on the market. Nothing major there. Looking out over at Wednesday, we already gave you the, make sure you go back and watch if you did not watch the Diagnostic Trading Hour from yesterday. I went into the news. I got you caught up through Wednesday. But one more thing to add on there, FOMC minutes here. What all can we put in? We want to add in one, be aware of FOMC meeting minutes. This is not the interest rate with the press conference. Okay, this is the minutes. It can have a big impact. It can have no impact. It's not really a tradable event because it's an event. It's more of just, a report coming out, not a number and variations on the number. But people will pour through that, see if they see any clues on tapering, interest rates, etc. So make sure you are aware of that 2 o'clock FOMC meeting minutes report. Again, big be aware event. And then another one right after it at 2:30. ECB President Draghi is going to be doing a little speech. Not a major press conference, just a speech. But nevertheless, of course, anything he says can have an impact on the market as well. And yesterday, like I said, I went over the news, but I want to make sure I go over the be awares today. We also got core machinery and tertiary industry activity at 7:50 tomorrow. I think I already have that one on the list from yesterday. But be aware of that release. As far as the news you can use, yesterday we covered a few trades for you. We got the Canadian housing start report coming out at 8:15. Looking at doing an iron condor entering at 8 o'clock. And for a 10 a.m. expiration on the spreads, buying the lower spread, selling the upper spread, and looking for a mere $20. Very, very small movement expectation there on the dollar CAD in the morning. So be aware if you trade the dollar CAD about that movement expectation. And then looking over, we got the oil inventory report come out we can use, and we'll talk about that. We'll bring up oil. We'll look at the expected movement on oil for potentially a iron condor or a straddle. It really just depends upon the pricing of the spreads at that moment. And then in the evening, we're going to have the Aussie unemployment change report here. And so we'll be looking at the Aussie dollar. And when the news comes out at 9:30, we're looking to get in at 8 for a 10 o'clock. You also could check out a 6 for 11 because maybe the 8 won't have enough premium built into it with only 2 hours on it. You're going to be looking for a $35 minimum profit between the bought lower spread and the sold upper spread. And usually it has historically stayed within that 35 pip range, making it a decent, consistent trade that you could have done. So we'll see how it turns out. And the one other trade we got, again, I went through this in slow detail yesterday, but we got the pound-dollar trade balance report coming out at 4:30 in the morning. Not a big mover on the pound-dollar at all. We're going to be entering as early as 11 o'clock. We're going to be looking at a 7 a.m. expiration on buying the lower spreads, selling the upper spreads for a minimum profit combination of the two of $30. And that will catch you up for tomorrow. Going on into the next day, or you know what, before we dive into that, let's go ahead and pull up that oil report just to give you the expected movement on oil. And I'll open a chart up over here. We'll check it on out. And let's see what we got. We got oil. And I'm going to just pull up regular minute-based bars. I'm going to look at 5-minute bars, load on my spike tracker there, and we'll pull it on up. Okay, so here we go. And doing the spike tracker, and we got it. Okay. And then we're going to come back and review some of these markets as well, because we got some nice movement today, and a lot of that's pretty burnt out at the moment. But oil right now down about half a deviation after being up half a deviation. We moved a full deviation, and we're at basically 1.07. So basically 170% of a deviation move right now. So not expecting a whole lot more move on oil at the moment. But what I wanted to look at was the expected range for tomorrow when the report comes out here. So we're going to look for the 10 to 11 Wednesday hour. And right there, 10 to 11. And it looks like we get about 61 pip expectation in move. So you want to look at either really cheap straddles, maybe strangles, not usually my personal preference. I'm much bigger fan of the spreads for doing straddles than I am for the binaries on doing strangles just because of how they work. And but also iron condors. So to pick up on, again, what you can get, again, that's between 10 and 11. So you could look at an 11 o'clock expiration. You could look at maybe even a 12 o'clock expiration. But, just pull up your charts, maybe throw on expected ranges to end at 11 o'clock and at 12 o'clock to see what the expectation is going to be for you. But the 1 hour expectation is 61 pips. Okay, that gets us caught up and ready to go for tomorrow. Now let's go ahead and see what news you got that you can trade over on Nadex on Thursday. We're going to have a few different reports coming out that are tradable. And so we'll go through those. We'll also go through the Be Aware events. All right, we got the trade balance report over on the pound. And right here, let me pull up just everything that's on the list. But let me bring it up. So trade balance ought to be coming out at 4:30. And then we'll have the asset purchase facility and bank rate votes will be coming out as well. So we'll cover both of those. That comes out right at 7 o'clock, okay, on the asset purchase facility and bank rate votes for the interest rate. And then there'll be a rate statement. It says tentative. Well, what does tentative mean? Well, let's see what tentative means, because the best way, just like any other kind of trade, let's look at when they have historically released the statement. So we got it right here at 7. This one's at 8, 7, 8, 7. So you get one of those. You get 7 or 8, right? And so that also could simply be a time change there, going back and forth. But we'll come back into it. Look at that rate statement, but we expect it to come out either at 7 or 8 o'clock. And I'll check out last year's so we can know exactly what to expect. There, we'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome on back here to the Diagnostic Trading Hour. And so, anyways, we're checking out some of the different reports for Thursday, trying to get your week wrapped up here. First one we're going to is the, I had housing starts up, but we already knocked that one out. Trade balance on Thursday, 4:30 a.m. Obviously, if we're going to do this trade, most of us are not staying up that late at night. So what I do is I try to see, can we craft the trade around getting in around, either 11 o'clock or midnight. For the 7 a.m. expiration. And if we do, then what are we looking at as potential movement? We got 15 ticks. We had a little bit bigger move, but that was with the manufacturing production report coming out on that same day. So we're going to sort of discount that one. One with just the trade balance report. Now, on this one, we're going to have trade balance and what else do we have over here? Go back in. Okay, there we go. So we got our trade balance. We don't have anything else happening between that and 7 a.m. And let's see, another trade balance report, 15 pips. Next report after that, we got about 19. And one after that, we got like 2. And let's see here, we had a move up about 26, but it came on back down at 7 to finish right around 5 pips on the day, 2 pips. Let's see, one report was pretty big. Again, it was with manufacturing production that the report seems to be consistently larger. So we'll just want to remember that for future scenarios. When manufacturing production, industrial production, and trade balance happen at the same time, we usually get about 40, 50 pips. But since this report is only going to be trade balance, looking at a small trade, I'm going to go for 30 pips, Iron Condor, entered at 11 p.m., 7 a.m. expiration on the pound dollar. And that's, again, buying the lower spread and selling the upper spread over on Nadex. That gives you your trade balance for it. Now, what about the official bank rate? That's going to come out right at 7 a.m. Is there a big move there? One which we would be looking out for? Is it a small move? You know, what can we do with the report? Doesn't come out that often. That rate statement report comes out very rarely, as you can see. So just to match it up with previous time frames, I went in and I'm going to delete all the old ones we got up. And this is July, so I'm going to pull up the previous July reports and see if they're consistently coming out at the same time over the last few years here. And let's see what else. We got at least one more in here. Let's see, I think I got that July 09. We didn't have a July 08 and a July 07. Okay. So just sort of see, you know, are those coming out consistently at 7 o'clock this time of year? And the answer is yes, 7 a.m. So it is tentative, but at this time of year, it comes out at 7 a.m. consistently. So I would not be surprised to see the MPC rate statement come out at 7 o'clock as well. Anyways, looking at the asset purchase facility and official bank rate votes, do we have a consistent impact report? We'd have to be, this is going to be a little harder trade, happening right at 7 o'clock. You'd be looking at like a 6 to 8 to be able to actually trade it, or you could be looking to get in after it, like right as the report comes out when the new ones come out, because it doesn't just seem to take off. You usually get about 5 or 10 pips in that first, half hour. And so this is a trade I'd be looking more to see, can I do anything into end of day? And I'm seeing some decent moves on it. I'm seeing but I got to find them when they don't have the minimum bid rate, because I don't believe that's coming out on the euro. Nope. So the big moves happen when the minimum bid rate's coming out at the same time on the euro. But when the announcement's basically standing by itself, looks like it's pretty inconsistent. I mean, 10 pips, 30 pips, 40 pips, 12 pips, 50 pips. So on that one, I'm going to stand aside. I'm just going to go ahead and take advantage of the trade balance report. I'm going to leave the official bank rate alone, but I would put a be aware pound official bank rate coming out, not a tradable event based on inconsistency in past movement. But definitely have that one on your calendar to expect some movement potentially, and would not be surprised to see somewhere around 30 to 50 pips tomorrow on the pound just based on that report coming out. Okay, so looking on over at the jobless claims report, that is one that there's different ways to trade it. My favorite way is just to look at the expected movement. It comes out at the exact same time every hour. It comes out, every week, and so you can, basically plan on that report, 8:30 in the morning, and really not a massive impact report, all in all. So can we do something with it, knowing that it usually does not have that big of an impact overall? And I'll answer that question for you when we get back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. All right, so we're going through, we're knocking out the news. I had the next step was to go through jobless claims, see if there is basically a consistent way to trade it. And really looking at the euro dollar more often than not, okay? Just going through and looking at all the trades. And I'm talking about, looking at a 10 a.m. expiration. I only see one trade. Let's see, so far I'm going through like the last 12 releases on this. I get a lot of releases since it's every week. Out of the last 12 releases, we've only had one actually have any kind of significant movement. That one moved pretty big. It moved like 80 pips. The rest of them on average have moved about 10 to 15 pips. So for a realistic fill price, I'd be looking somewhere around $30 as a minimum entry, and then of course if it does go up 60 pips, get out of the thing and move on, okay? But it's pretty rare there. But looking at, again, a minimum entry, we're looking at 30 pips, minimum profit, enter at 8 a.m., 12 o'clock expiration. Enter at 8 a.m., 10 a.m. expiration, enter at 8 a.m., 10 a.m. expiration for a $30 minimum profit, buying the lower spread, selling the upper spread, doing an iron condor right there on that trade. And that wraps up the jobless claims report for you. Looking on over, going into trying to get this week knocked out. Going on into the home loans report coming out on the Aussie dollar. That'll be released on Thursday at 9:30 in the evening. And let's see what we got there. Being a 9:30 report, we could choose a 10 o'clock or 11 o'clock expiration. Let's see which one seems to work out better for us on a consistency basis. We can enter as early as 6 o'clock. And if I'm looking at, let's just say 11, so because you can usually get in for a little bit more there, hopefully. 11 o'clock, like 13, 12, 19, 15. Had one big report back in February, moved pretty big but it moved fast. Right out of the gate, we got a movement of about 50 pips on the trade. And let's see, that keep going. Yeah, about 50 to 60 pips. Then we got a move of 45, 25, 2. It's a very small move there, 30. Another move of about 20 pips, 15 pips. And it's going through how big these moves are usually for you. I've got a move of about 20. So just based on how much this thing does move, I mean, a couple times we've had some decent moves. But, out of the last 12 months, 10 out of 12 have been less than 30 pips. So I'm going to go ahead and go for a 30-pip minimum profit, buy the lower spread, sell the upper spread, Iron Condor, enter at 6 o'clock. So you can really increase that income potential by having extra time and premium on it. And that may actually even help you on some of those bigger moves because a lot of times it drops down and then pops back up. So from the 6 o'clock, the big moves actually aren't that big and the small moves are still pretty small. So again, enter at 6 o'clock for an 11 p.m. expiration for 30 pips minimum profit on the 11 o'clock expiration for the Aussie dollar, buying the lower spread, selling the upper spread. Now, these trades are not always available. It really comes down to, what kind of premium is in there that you can use. And so basically what I'm doing is I'm giving you the requirements I have. If I'm going to take a trade, this is the setup that has to be there. The one last one, we'll see if there's anything else, but that covers most of the reports there. That actually cover. Don't forget we got natural gas, of course, coming out at 10:30 as well. So sort of the same setup like the oil trade that's looking at expected range. And I guess since we're on that topic, let's go ahead and pull up natural gas. Let's look at the expected movement that we have on it for Thursday. And go right over here. Oops, wrong one. Got Nasdaq. And got some great moves on the indices right now, but we'll come back to those. All right, so going on down, and let me pull up natural gas. And there we go. Natural gas, what we're going to be looking at is the expected movement on the report, which comes out right there at 10:30. And let's check out the expected range from the 10 to 11 o'clock time frame on Thursday. That expected range is going to be, let's get on down here, a little bit lower. There we go, we got it. So 0.126. So pretty big expected moves happening on that report. So basically that's how far we're expecting it to move. So 0.126. You're going to want to look at the spreads. You're going to want to see if a straddle or if a condor is better just based on the pricing. But you can see that's 3 to 4 times the regular big hourly moves that happen on any given day. We go back and look at the exact same hour. I mean, you'll maybe see 0.030 being the expected move. So it's about 4 times the expected move there when that report comes out on Thursdays on natural gas. So some good volatility, which can lead to either very expensive spreads or could lead to cheap ones with a great opportunity. So either way, we're going to be either neutral or breakout. So we don't care what way it goes. Just either don't go too much or, go really far. And just check out and see what's available to find the best trade on that one. All right, so the last one we got the Canadian employment change, which will be coming up. Let's see if there's any other be aware events that you want to have on your calendar. Doesn't really look like it. So basically the NFP for Canada, you can see with their unemployment rate and employment change. And on that trade, that's going to come out Friday. It's going to be at 8:30 a.m. Eastern Time. And let's see if there's any good setups for us with this report. Maybe trading it to as late as 3 o'clock if we need to or whatever. But, okay, last report. If we look over at the 3 o'clock expiration, so that we can get a lot of premium on it, it's like about 25 pips. One before that, 65. Then we got 41, 111. let's see, 15, 18. End of the day seems to be pretty good overall. 13, 20, 50, 27, 5, and 61. Okay, so that's end of day. So we're pretty mixed on end of day. Let me go ahead and check about like highs and lows. So to see if maybe there's enough movement to do a straddle on the trade. We had 40 pips on the last report. We had the high there. We had 80 on the one before that. The low we had 52, 111, 83, 57, 69 pips. I mean, the thing just jetted up. I'm looking at about 43 pips. And took all day, but down to 51 pips by 3 o'clock. Had to drop down to about 50 pips, run up of about 50 pips, 89 pips. If you can pull it off, I don't know if it's going to be cheap enough. If you can pull it off, anytime before 8 o'clock, or anytime before 8:30, really. So as early as 7 a.m. and as late as 8, I'd say 25, okay? If you can pull off a trade for 30 pips or less on the trade, which would mean that you'd basically be taking profit about 45 higher. You could go up to 35, I guess, basically just looking at all the numbers. 35 would be the max. So we'll put the max risk based on all the stats at $35 on a straddle. Not a condor, but a straddle. So that's buying the upper spread, selling the lower spread, and the movement seems to happen. Let's see, the last report we got most of the movement by 10 o'clock. This one we got most of the movement by before 10. Before 10, before 10, before 10. Almost all the movement before 10 o'clock. Okay, that's pretty consistent. So that's good because that means we can, if we can buy that shorter term one, then that's great. Let me see about 9 o'clock. So let me back up one more time. I'm going to see, do we get this movement by 9? We really get that last little push there. Sometimes we get that last little push in between 9 and 9:30. So I'd rather get that a little extra time. So $35 maximum risk straddle dollar CAD on Friday, 8:30 a.m. release time. Enter anywhere between 8 and 8:25. And, take your profit at 1-to-1. That's very important, okay? So you want to net out a $30 profit or $35 profit on the trade, which means, selling $35 higher than you bought the upper spread or buying back, $35 lower than you sold the lower spread. But a simple trade. And like I said, you could do the 10 a.m.s, but don't be shy about looking at the 3 o'clocks. Like sometimes I'll see like 31 or 32 maybe for a 10 a.m., and then I'll see like 36 or 37 for 3 o'clock. So, you just got to look at it and see if you can get, the rest of the day for the movement to happen and only give up a few ticks. And, maybe you end up paying 38 or 40 ticks, but, if you can get that $35 profit goal, that's awesome. You don't have to get the whole 40, okay? But that would definitely be my trade of choice, would be a straddle on the dollar CAD employment change report. And, 10 a.m. at a minimum, ideally 3 o'clock. So you just got to see if the pricing's there. I may even go a little bit more expensive. I really want to take profit at 30 or 35 pips net profit. So 30 to 35 pip net profit, exit the trade on either side, and $35 max risk on a 10 a.m. And I might go, $5 higher or something, but I still am only going to go for that $30 to $35 profit on a 3 p.m. expiration. Okay? And that catches you up for this entire week's news layout. So you have all the trades there. You get, if you want to get the slower layout of the step-by-step trades for tomorrow, just check out yesterday's on Channel 7 there over at TFNN.com. You click on Tiger TV, show you where that's at. But on Tiger TV right there, you can go to Channel 7, and you can see the archives and load the trade up. And we even have, you can download the podcast and everything else. Like right there in the radio podcast, and see the archive shows right there under radio. Okay? Well, now that that's kind of, let's check out the markets and see what might be popping up that we might be able to do. We don't have a lot of time left in the hour, but we got about 15 minutes here. And one thing I did want to do is I wanted to review these indices and just go through them with you. And one, we'll see if there's a trade set up. Two, we'll just go over these big move days, what to expect, how to play them, and really one of the big things is the importance of deviation levels. And as you can see right here, we got the move right there on the S&P, moved down 1 deviation, oscillated there since about 11:20, and finally here a little past 1 o'clock started moving on back up to 0.7. So again, that deviation level really giving you a clue of what to expect on the market movement. So you're like, okay, that's where I expect the thing to stop. That's where I expect it to oscillate. That's where I expect it to potentially reverse. So I'm not going to add in a short trade. I'm going to tighten up my stops on a short trade. I'm going to look for potential reversals or flat trades going forward on the day. I'm not going to try to force them. Okay, I'm not going to try to fight the trend. If the thing's just, if it becomes like one of those 2 or 3 deviation days, don't fight it. But, don't be surprised if the market does bounce back up. Different markets have a little bit different, personalities and all that. S&P, usually 1 deviation is pretty standard there. Of course, on all of them, 1 deviation is pretty standard. But looking at the Russell, it broke through a little bit further. It broke on down to 1 deviation, but you'll notice that when it broke down to 1.5, and it really just oscillated between 1 and 1.5. Almost the entire morning between 10 and 1 o'clock, and then moved on back up to 0.7, just like the S&P did. So it had a little bit more volatility, which it usually does, and busted on down, but stayed really within the expected movements of each hour. So really, maximizing those expected moves, but staying right within those expectations. The one exception being this morning, when it broke on down and broke on through, it did so with, excellent increasing volume there. Going in, let's look at the Nasdaq and pull it on up. It had a nice big move today and a little larger movement on the deviation front. And right there we can see it actually moved all the way down. And that's why I say, wait for confirmation. You don't just fade the thing. It went down to 1 deviation and didn't care. That volume kept coming. It kept driving it down. It drove it down to 1.5. And then in the next hour, it drove it on down to 2. So massive move back. Finally, it decided it's done. Volume lightens up a little bit, and the Nasdaq starts pulling on back up to 1.5, and basically pull back, pretty decent chunk there. Might move on up, back up to 1, but that is a reason why I don't just fade them. Now, I'd say majority of the time you fade them, you're probably fine, because usually it doesn't move past 1 deviation that much. But either way, I just like to make sure that, I have some sort of confirmation. And one of the systems I used, I've taught this, I haven't brought it up in a while, but and it's a 10-minute deviation method. And let me show it to you. And this is a way that I sort of trail stops, add in positions, and look at reversals. I used to do this a whole lot. I haven't done it as much, not because it hasn't worked. It's just I have so many different plays in my playbook. I can only look at so many at one time. But we'll look at it on NASDAQ. This will be just a interesting little case study. Then maybe we'll pull up some of the other ones as well. But I go in and I look at 10-minute bars. Okay? And let's see. We'll go magnet pricing. That'll be the right template for that. And when you come back, I'll highlight this one with you and show you sort of a pretty cool stop method and a reversal method as well. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And so when we left off, this is, short system. Maybe I'll go into a little more detail for you tomorrow, but it's just a 10-minute deviation level method. That's really all you need for it. And what you're doing is you're trading in the direction of the bars when they close below a deviation level. And you use that as your trailing stop. So, for instance, we got, markets going up, markets going down, whatever, we're on settlement. Finally, the market decides to break, one way or the other. But you can follow this thing up and down, up and down. I'm not going to bore you with doing that all morning long. But the last close below that we had, it was right here. There wasn't a close above since then. So right there at 420, basically it was short. So we go short right there. We have our stop 5 ticks above the high of that bar. So market's doing a whole lot of nothing. But finally, market wakes up this morning. You come in, you see it's a short. You could add on that short like first thing in the morning because it still is right there. It moves on down, and then finally it closes below the 0.5 deviation level on this bar. When it does that, we're going to go ahead and move our stop 5 ticks above this bar. Now it comes down, it closes below this 0.7 deviation level. Now we'll move our stop 5 ticks above it. Okay? So very simple here. Moves on down, comes on down here, and let's see, what do we got? We got a low there, low, close, 3871.75. So it does close below the level, so we can move our stop down Again, you could also be adding in when it closes down if you wanted to, but anyways, I like to do it usually when it reverses. Anyways, but we're going down. We haven't closed below. We've touched. It is optional when it touches. You could also move it down right then. So you could have moved it, here. If this is a little bit more aggressive, or maybe conservative, I guess you could say. Just going to tighten it sooner, so there's a little more chance of being stopped out, doing it right when it touches it. But anyway, so it moves down, and then it closes below this one. Now, if it closes above it and below it again, and you can move the stop down further, you move it down even further. So right down here, it touches it. So again, you could be a little more aggressive on your trailing stop, just 5 ticks above that, or you could wait till it closes below it. If you wait until it closes below it right here, you move it down again. Okay, it comes on down. It touches, but it doesn't close. So if you use the aggressive one, you could. Otherwise, your stop's still up here. Comes back around, finally turns around. Your stop is either hit here or it's definitely hit at this point. When that happens and it closes above, okay, and your stop is hit, now you have a reversal trade with your stop now being below the low of that bar. So now you're waiting for it to basically get up and either touch or close above 3872.25 to tighten that stop up. And that entry would have been right there on that level. So pretty simple, very simple method. You can just literally trade the deviation levels just like that. It works best on 10-minute bars. I tried it on other bars, and this is a system I sort of discovered by accident. Just going over, sometimes I go through the deviation levels, and when I first started the show, I used to do it every day in detail. We'd run through all the markets, and I had 10-minute bars up because I look at 10-minute volume for magnet pricing, and I just noticed this pattern again and again and again. And it's a pretty cool, very simple trading system. And you can do it on futures, you can do it on forex. There's you can apply it to Nadex and spreads. You could also use it just as a directional trending type indicator. So right here, you're short. It hits that, boom. Now you're neutral. So imagine having like a red line plotting for shorts, and then going maybe like yellow, and then all of a sudden it goes green when it goes back above it. Okay, and now you got a long. So it can be used just for trend confirmation. It can be used for signal entries. It can be used for trailing stops on any system that you use. And again, you can get access to the deviation levels. I post them on the site every night right there in the scanner. I hope you all have a great day, and I will see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.